Okay, great. Thank you all for your patience. We will start off in another 5 minutes. Okay, I see Mr. Rahul and Bharat who have raised their hands. If there's any specific thing you would like to ask, you can put it on chat. And towards the end of the session, if anyone wants to interact with our speaker directly, we will allow that also. But for now, if there's anything, please put it on the chat. Thanks for understanding. Without any further wait, let's get started. Once again, good afternoon to all of them present here. We have a good number of audience. We are expecting a few more to add. I hope I'm audible. First of all, I would like to thank our speaker, Ms. CA Deepa B, for joining us for yet another webinar. This is, in fact, our seventh or eighth webinar with Ms. CA Deepa over the last 1.5 years. Thank you for joining us, ma'am. So, before we head forward into the topic today, I would actually like to give a small introduction about the company that I represent, that is Web Solutions. So let us move forward. We will go to the next slide. Dear all, once again, I hope I'm loud and clear. I'd like to see a quick yes or no on chat. Okay, thank you, Ms. Aisha. All right, so I am Siddharth and I handle product marketing at Web Solutions. I also have my colleague, Mr. Rohit Palanti, with me here today. So Web Solutions is a 20-year-old company as of today. Web or Wipro e-peripherals, we were actually known as Wipro e-peripherals, and we were part of Wipro itself. We were a small peripherals division within the company, and in 2000 we became an independent company. So we have actually moved from the peripherals solutions offerings. Today we have evolved to something more significant, which I will show you in the coming slides. Let us move on. We have three different offerings as of today, as you can see on the screen. Managed print services, digital transformation solutions, which is two solutions on offer, as you can see, GST and DMS, and thirdly, intelligent office automation solutions. Let's move on. I will talk a little more in depth about what these solutions exactly are. So we will start with first one, serial number one, that is managed print services, which is our signature solution. We are known as India's #1 MPS company. The business here is such that we deal with printing hardware based on customer or consumer requirement, and they would be charged per print. Aside this, we also handle full service and support and asset management, wherein we will deploy printers, consumables, and anything related to printers, and we will also handle the maintenance side of it. This is what we do with web managed print services, and we are #1 in India on that part. Moving on to the second one, intelligent office automation solutions. We have the latest range of best-selling multi-function printers on offer today. A point to be noted, we are the authorized distributor alongside Ricoh Japan to sell Ricoh products in the country. We also handle delivery and after-sale support within India. Now, let us move to 3 and 4, which is digital transformation solutions, which I'll cover quickly. The first product, that is GST, I'm sure all of you know because we have mostly relevant audience here today. We in fact hold a license called GST Suvidha Provider. We are appointed by the GSTN, the government itself. We have an all-in-one solution which handles all your end-to-end GST needs and requirements, right from filing, reconciliation, data preparation. We also have 100 different methods of validation that is built onto the platform. Aside this, we have built-in modules for e-way bill, automation, e-invoicing. We also undertake and handle most ERP integrations right from SAP, Oracle, Microsoft Dynamics, and even custom integrations through APIs. And aside this, we also have a solution called Manage GST Filing, wherein we collect the data, we prepare it, we validate it, and then we give it to the customer or we file it ourselves. So this is what we do with the GST end. Let us move on to the DMS product, which is actually a workflow automation and low-code development platform built for business process automation. Here we offer tailored custom solutions to make any business process efficient and effective. We have different solutions for employee records management, that is HRs. We also have solutions for procurement and supply chain teams. And we also deal with something called management of change for pharma and chemical and manufacturing industries. So this is all there is from my end. Let us move on to the next few slides. As a quick view of our large scale clients. So this is what our platform is about. I will leave this on for probably 30 seconds just to give you a quick view of what this is. Mr. Prashant, we will get back to you on this. I just saw your question. All right, moving on to the next slide. A little more about what our solution has on offer. Okay, so that's it for the introductory end. Now, before I introduce our chief speaker, CA Deepa, and hand it over to her, of course, we cannot show a demo today of our platform. I would love to show the demo, but I will have to leave this on for another day because of time constraint. So let me quickly drop a poll for all of you, the ones who are present here today. I would like to know how many of you are actually interested, are exploring a GST demo in the market. If any of you are exploring, if any of you are actually actively looking for solutions, you can reach out to us. We will be happy to give you a free full demo of our GST solution. Let me leave this on for the next 1 minute, this poll. Please note that any GST requirements, any specific queries that you have, this can be dealt with in a one-to-one demo as per your time and convenience. Also, those of you who are interested in our DMS solution, that is business process automation, if any of you are looking for your company, you can please type it on the chat. I will note down and get back to you on that. Once again, thank you all for joining. I just want to mention that we also will be taking up questions towards the end of the webinar. So any questions related to the presentation from our speakers end, we will take it up. All right, thank you for your time. Let me end the poll and move on. Welcoming our chief speaker, CA Deepa. She is a BCom graduate and a chartered accountant from the Institute of Chartered Accountants of India. She qualified as a CA in November 2018. For almost 1.5 years, she has worked as a team leader of managed filing services team in Web Digital Services Limited, that is our company. Currently, she is practicing as the founder and proprietor of Deepa B and Associates, a chartered accountancy firm in Bangalore, started in September 2020. She has also completed her diploma in information system audit. In addition to this, she also has a rich experience of more than 7 years working as a teacher in a school before getting into the CA profession. Her few key areas of interest are GST, direct tax, and corporate law. It is my pleasure in welcoming you for yet another session today, ma'am. I'm sure the audience is looking forward to directly hearing from you. Over to you, ma'am. Yeah, ma'am, your voice is feeble. I think you'll have to.
Yeah. I hope it is audible now.
Yes, it's audible. Yeah.
Yeah. So, good afternoon, friends, and a very warm welcome to this session on essentials of effective reconciliation. So, first of all, I would like to clarify. I think many of the participants have asked this question in the registration form itself. So, whether this session is basically on reconciliation in the broader sense, or it is on a specific aspect. So I would like to clarify that this session is basically with respect to GST reconciliation, which is specifically for purchase register versus 2A or 2B reconciliation. So that is the first clarification I would like to do. So, and with this, let us take off the session. So, friends, being an independent practitioner and a consultant in this specific domain, so I have worked right from small companies to the larger companies. So based on my experiences, whatever I have gone through, so I have marshaled my thoughts and ideas and presenting it before you all. So first of all, we all know determining ITC, which needs to be claimed in GSTR 3B in itself is a hard nut to crack. But the preparatory activity, the preliminary activity preceding this GSTR 3B ITC claim is the reconciliation, which is indeed a Herculean task, as all of us are aware. So we are going to deal about GSTR 2 versus 2A or 2B reconciliation in this specific session. Before getting into that, first let us understand in general, in layman terms, what does reconciliation mean? As you all can see on the screen, so in general terms, it means harmonization or process of making consistent and compatible. But so when we read this definition, it doesn't sound much relevant or doesn't make much sense when we look it in the context of GST. So which definition gives us a closer insight is the definition which is given with respect to the accounting process, because even in finance accounts, so we would have come across multiple reconciliation like vendor reconciliation, ledger reconciliation, multiple reconciliation, bank reconciliation, all these we would have done. So when we look at that definition, it sounds more closer to GST reconciliation. So as we can read it out on the screen, reconciliation is an accounting process that compares two sets of records to check the figures are correct and in agreement. So is in case of the GST reconciliation. As we know, in GST reconciliation, we will be basically comparing the books of accounts with whatever suppliers have uploaded in their GST1. So that is the thing. But is it the only type of reconciliation present in GST? The answer is no. In GST also we have multiple reconciliation. As you will be aware, we compare GSTR 1 with GSTR 3B, GSTR 1 with e-way bill, e-invoice with GSTR 1, GSTR 2 versus GSTR 3B. Likewise, there are multiple reconciliation. Now, narrowing on our topic of today's discussion, our prime focus will be, as I mentioned earlier, is basically on GSTR 2 versus 2A or 2B reconciliation. So you will be getting it clarified in the further slides why I have mentioned 2A or 2B. So because this most of you will be aware, but still I would like to throw some light on that aspect as well. But before getting into how to create an effective reconciliation system, how to create that entire ecosystem, first let us understand why is it even actually required, why it is required, this reconciliation is required. So some of the points I have listed out. So first thing is, it is a requirement of the act. As we all know, we are entitled to claim only that ITC which is eligible and which is matched. So only then we are entitled to claim that ITC. So it is indispensable that we do this reconciliation and then only go ahead and claim the ITC. So the second thing is ensuring accurate accounting. I personally believe that accounting has a very close relationship with reconciliation. Unless we do a proper accounting, there cannot be a proper reconciliation. So whenever there is any repetitive clerical errors or the accounting errors, that could be highlighted only through the reconciliation. Once we do the reconciliation, we come to know what are the patterns of mistakes which are committed, so that we can also take the corrective actions. So this is the second point. And then to ensure claim of legitimate ITC. So we cannot blindly claim ITC as per books or as per 2B, because it is not in conformity with the provisions of the Act. So in order to know what is the legitimate ITC, first we need to reconcile, because the Act demands that you match it and then only you claim. So in order to note what we are entitled to, so we need to do the reconciliation. So that is the next thing. And then, so once we start doing the reconciliation, it avoids all the undesired consequences like claiming excess ITC or shortfall of ITC. So as you know, excess ITC leads to interest implications because it is the consequence. And shortfall of ITC, it will affect your cash position. So in order to avoid all this, we need to do the reconciliation. And as I mentioned, GST, we cannot look at this concept in isolation. So because it is having its impact on many other financial aspects like working capital flow, cash management. So we need to have a proper control and we need to do the reconciliation in a proper and effective manner. And before I move to the next slide, I would request Siddharth to launch the next poll.
Yes. I'll launch the poll right now. Audience, I hope you're seeing this on your screen. So, in your opinion, how effective is your current reconciliation process? Let's find out where exactly we stand. I will leave this on for the next 1 minute. Hope you're seeing this, Deepa. Looks like it is somewhere between 50 to 95. That's what it looks like. Okay, another 10 seconds on this poll. So, according to me, I believe reconciliation is where most of them have trouble with, correct? That is the region.
Because that is more complex.
Right. And that process is prone to errors most of the times, right? No matter how much you take care of it. Okay, so let me end the poll and we will just share the results for the audience as well so that they see it. So yeah, we have 80 to 95.
Yeah, a good blend of answers actually.
Right,
so
right.
what I can see is some are feeling like their reconciliation process is okay, but not up to the mark, and some are having, I think, extremely good control over the reconciliation process. That is what I can see.
Correct.
Yeah.
Which is a good
That
thing,
is-
in fact.
Yeah. So now moving on, once we have understood why it is important to do the reconciliation, the next aspect is, so what should be our approach? So it's a wider established fact that we should always have a standardized approach. So a disciplined, organized approach always helps us to reach the goal easily. So in order to do that, we need to have certain specified steps. So this is what I feel that these are the important steps which any entity should follow in order to create an effective reconciliation system. So first it is the defining the structure. So in defining the structure, basically defining the roles and responsibilities, authorities, delegation of power, all these needs to be properly defined so that every staff in that particular team knows what is their actual duty, what is their responsibility. If something goes wrong, who will be got hold of? So all these needs to be properly defined in the structure. And then comes standardizing the process. Once the team is decided and the roles and responsibilities are decided, what actually the work they need to do, what is the way in which they need to carry out the activities, that needs to be decided. And this also includes setting the parameters and deciding on the metrics through which their performance will be evaluated. So this is the second important aspect. And third one, it is basically the work of the operational staff who will be executing the work. So here they have to display their efficiency in order to effectively carry out the process. And then comes monitoring and evaluating. So this is almost a simultaneous process which goes on with the execution. And this is not the work of the operational staff. It will be the operational level managers or the higher management who will be monitoring and evaluating the work of this aspect. And then next comes the step which is modifying and improvisation. So this can be called for due to change in the law, or it can be based on the urge of voluntary improvement. So both are possible. So in this way, this is a cyclic process. As I mentioned, whenever we go for some modification or improvisation, again, we need to define the structure, define the process, and execution comes, and again, monitor and evaluate. And this is a continuous process. So here we need to keep in mind, as one of the quotes that is mentioned there, what gets measured gets improved, and it gets managed and it gets done. So it's very important to define a standardized approach towards the effective reconciliation system. And here, when we look at this chart, basically, we need to understand that there are not only a single set of people who are involved in this reconciliation activity, but there are two different sets of people who are involved in this activity. So after understanding the systematic approach, now we need to understand what are the responsibilities on their shoulders of these two sets of people. So there comes the role of the benchmarking, ideal internal practices that we need to understand. So now we will look at the ideal internal practices, which acts as a benchmark for anyone to see whether they are moving towards a better and positive change, which will ultimately help them achieve the effective reconciliation system. So here first I'm presenting the management perspective, means from management side, what are all the expectations? What should be their approach? So that I'm discussing now. First is the standard vendor policy formulation. So basically, they should have a uniformly applicable vendor policy formulation. So in general, we all know that in their vendor policy formulation, they will keep the credit policy, they will keep the discount policy. Similarly, all the important critical aspects of GST, uh, uh, which affects their interest, also should be incorporated in the standard vendor policy formulation. So, and this could also be intimated to the customer through their vendor registration form itself. So, as a standard practice, so that even the vendors will be aware, as and when they fill the vendor registration form, they will be aware that these are all the policies of the company which are applicable to every vendor in general. So, that is the first thing which they can do. So, in order to protect them from the risks. And next thing is incorporation of critical aspects in the contracts. So first thing was uniformly applicable. Second thing is whenever there is a specific independent contract. So with some of the like whenever there is high value contracts are involved, there will be an independent contract addressing that specific transaction. So in such cases also, the management should be very keen that they incorporate all the critical points so that there is no much exposure on their part which will affect their financial position. So they need to take all the precautions in order to prevent the unfavorable situations. So that is the second aspect. And then delegation of right level of powers to the operational level managers and executives. So this is very much important. So I'm specifically stressing on that point because so we have seen instances because whenever there is no clear demarcation of what is the power of one person and how another should not trespass that. So whenever there is no clear demarcation, one starts encroaching on the powers of the others. So it is not right. And it also deteriorates the confidence of the operational level staff basically. So we have seen instances wherein a particular vendor directly approaches the higher level management. So without corresponding to the communication done by the operational level staff. What happens is the operational level staff starts feeling that we should not directly deal with the vendor. So thinking that they might end up in trouble. So all this needs to be avoided. Whenever delegation of power is decided, the higher management should also try to stick to that. So they should not entertain much of exceptions to this rule. So that is what I feel. And then next thing is fixing targets and timelines. So all of us know that GST is a due date driven compliance. So there is already a due date which is already like a target. But besides that, if the management feels that for certain critical activities, if they want to fix the targets and timelines, so that is always a welcoming step which inculcates the disciplined work approach among the lower level staff. That is also a welcoming feature. And then incentive and disincentive. So we have seen certain organizations adopt a policy of rewarding people who always keep the timelines and who always go with the compliances properly in the specified time. And they also disincentivize such staff who doesn't do the compliances and they default. So these kind of activities can also give an encouragement to the staff to perform better and work in a very disciplined way. So this is another point. And then giving guidelines on prioritizing the vendors. So all vendors are not equal. When I say this in terms of finance, I'm saying so because with some vendors we'll be having a transaction of very high values and volumes also. So some transaction may be like some with some vendors we'll have one or two transactions. So it is equally important that we pay priority to the vendors with whom we are having high value transactions so that we don't lose out on the higher value ITC. So whenever we need to deal with them, so we need to deal with in a prioritative manner. So this guidelines has to be given by the management, but the detailing of the work will be obviously done by the operational level managers and the operational staff. And then So after deciding all these policies and procedures which has to be put in place, other important thing is timely review of their policies, whether it is working effectively, whether it is existent, whether it is being followed, whatever has been prescribed. So all these needs to be taken care, and timely review and corrections need to be done. So this is management perspective. And next, moving on, it is the operational perspective. The staff who are involved in the actual working of the reconciliation, how they need to be trained for the work, how they need to be made more effective. So this we need to understand. So first and foremost thing is understanding of the subject. So as a prerequisite, they should be provided proper training on the subject. So in most of the cases, wherever we come across the mistake, it is due to lack of the subject knowledge. So in order to avoid such mistakes, first we need to train them on the subject. That is a must, irrespective of whether the person is belonging to a tax team or a finance team. First we need to train them on the subject. And the second thing is proper training for recording transaction to the accounting team. So as I mentioned, accounting and taxation team must go hand in hand if the reconciliation has to be effective. More effective is the accounting, more effective is the reconciliation. So that is the thumb rule, I would say, because unless the accounting is proper and accurate, you cannot expect a good result from the reconciliation. So they need to be properly trained on recording all the critical aspects in a more accurate manner. So that needs to be, the training needs to be given to the accounting. And as I mentioned, so there should be timely meetings, communication and coordination between the tax and accounting team. For example, if there is a repetitive clerical mistake which is happening from the accounting team, obviously the tax team needs to communicate, because it is causing problem to them in their reconciliation. So that needs to be done in a timely manner. So this proper coordination is required in order to have an effective reconciliation system. And then fixing targets and timelines. You might be wondering, management also, I have mentioned targets and timelines. Then what is this target and timelines? Obviously, any larger work will be divided into multiple sub works, so which can also have a target and timeline. For example, management might have told that you have to file GSTR 3B by 20th. So then, as a preliminary work, as we all know, we need to do the reconciliation. For reconciliation, the team internally, they can fix their target and timeline. So that can be adhered. So this kind of targets and timelines will make them navigate through the entire process in a smooth manner. And then defining the standard process. Here, when I'm saying standard process, it is with respect to a particular team member work. So even the team member will have multiple works, how it has to be done in a systematic manner, and how there should be a step-by-step work procedure. So that needs to be decided by the operational level staff itself, and that needs to be recorded also. If it could be documented, that is a better practice, because whenever there is any employee attrition, if any employee leaves that position, so it will be easier for the other person who is replacing them to get trained on the work. So that this is basically on the operational perspective. So with this benchmarking ideal practices, one can set up a good ecosystem which will lead to the effective reconciliation system. So after this, so once we understand what is the ideal internal practices, the next thing what we are going to see in this session is common mistakes.
Okay. Ms. Deepa, before you go ahead with common mistakes, I'll launch one more poll.
Yeah.
All right. So I hope all of you are seeing this. Could making all B2B supply liable to RCM solve the issue of mismatches in input tax credit?
Yeah, while people start voting it, participants, so I will just give you a hint of why I have put this question. So recently on one of the forum, one of a learned person has put this question. So basically this mismatch is arising because the supplier is not paying and uploading the records. So he put across a view saying that how it will be if the recipient himself pays the tax and claims it. So then there won't be any mismatch, because whatever I'm claiming, I will be paying. So this is the view he has put. So maybe it is a drastic change in the entire process itself, but just wanted to know how is the mood and how people would receive it. Just wanted to have an idea on that. That's why I have put this question. So let us see how effective it will be. So it is basically with respect to B2B, not B2C. So whenever you are buying from a registered person, how it will be if you yourself is discharging the liability and claiming the ITC as well.
Okay, so most of them have actually said no. Let me share it anyway for the audience. Yeah, definitely max percentage is for no.
Okay. Okay. Maybe again, it will like change the entire system in a drastic way. And I think even the industry would take a long time to get adjusted to this, because now getting normalized with the existing system itself has taken so much of time. Maybe that's why nobody wants a drastic change. Okay, that
That's
might be the
true.
reason. Okay. Yeah.
All right, you can go ahead. Yeah.
Yeah. So coming on to the common mistakes. So when you just glance through these common mistakes, most of them you feel like it is accounting mistakes. As I mentioned, so I cannot speak of like mistakes in reconciliation without pointing at the accounting mistakes done at the accounting level. So here are few mistakes which we can see here. Incorrect recording of invoice number, invoice date, invoice value. So these are the common mistakes which are done: invoice number, invoice date, and invoice value. So it will, because these are the very much apparent aspects and the basic criteria based on which we'll be doing the reconciliation. If that itself is not correct, so obviously there cannot be an effective reconciliation. So these mistakes need to be avoided at the accounting level. Whether if it is possible through automation, that could be done, or if it is because of the like each certain supplier issue certain invoices which is not at all readable. In such cases, you need to get back to the supplier himself or herself and ask them, please clarify what is the invoice number, and then get it accounted. So that is the solution. Incorrect GSTN of vendor with multiple GSTN. So this is a very common situation which I have seen. If any buyer is dealing with multiple suppliers but belonging to a particular PAN, a single PAN. So in such cases, when they account of, with a different GSTN. Suppose I have bought from Maharashtra GSTN, they will put it in the account of Karnataka GSTN. In such cases, the supplier would have uploaded correctly, but the recipient would have accounted it wrong. So that's why it's very important whenever you account, you see in the invoice what is the correct GSTN, and then only go ahead with the accounting. And then inconsistency in tax type due to incorrect place of supply. So this is a very common mistake which I have seen personally. So this mistake basically happens because of lack of understanding on the subject, because most of them are under the impression that tax type is decided based on supplier GSTN and recipient GSTN. So for example, if supplier GSTN is 29 and recipient GSTN is also from state Karnataka 29, then it will be CGST and SGST. They don't even see the criteria of place of supply. But the actual fact is, whenever we decide the tax type, it is based on supplier GSTN and place of supply, not the recipient GSTN. So that is the reason. So they should be properly trained on the subject in order to avoid such kind of mistakes. And then invalid HSN codes. Invalid HSN codes, as you can see, so it will make the situation difficult in understanding what type of product or service it is. So that is one part. And another part is you will not be able to classify the proper rate of tax for that particular product. That is the problem which will be caused due to invalid HSN codes. And then using invalid GSTs. So whenever you add any new vendor into your supplier master, so please be very careful that you validate that before you incorporate that into your books of accounts. So that is the first check you need to do. Non-reporting of inward nil and non-GST supplies, because mostly we are worried about wherever tax GST is involved, but we generally become ignorant wherever there is no tax or GST is involved. So that is the reason why I see many taxpayers, they won't even report in their GSTR 3B inward nil non-GST and exempt supplies. So this is not an acceptable or recommended practice. So they need to do this in their GSTR 3B. They need to report. So recording transaction beyond prescribed statutory time limits. So we have seen cases even in 2020, we will be accounting the invoices of 2017. So this is not like it's not acceptable. So in system itself, in your accounting software or whatever automated systems you will be using, there should be a check in order to prevent the entry of backdated documents. Or after a specified timeline, it shouldn't allow the old documents. Or even if it is allowed, it should be on the additional authorization. Such kind of checks should be properly maintained. So that is the another thing. And then whenever in GST, we all know like there will be certain last moment changes which we do while filing GSTR 3B, GSTR 1. So all these changes, irrespective of whatever is the nature, whatever is the amount, please do keep a track. Please do keep a track. And if it requires changes in it in the subsequent return filing, please ensure you keep a proper track and control of it. Otherwise, everything will go for a toss. So, and at the end of the year, when you file the annual return, you will be just wondering where did this amount come from, or how did I finalize this value? So you will be wondering on yourself. So that's the reason why you need to keep proper references of last moment changes, and if any other changes made are which is required to be made in the subsequent return filing. And so another hesitating feature in the operational level staff, what I have seen is they won't properly follow up with the defaulting vendors. So they themselves are reluctant to ask the vendors, maybe due to out of fear of losing the relationship with the vendors. So certain times even this is the case. So they need to be very clear, because already when we have a properly defined terms and conditions, we should not hesitate. If there is a wrong, it is a wrong. And in case if we are wrong, once you communicate something to the vendor, if something is wrong on your end, there is nothing to admit the mistake and rectify, because that will solve the problem. If we don't communicate itself, then that is going to lead to another big problem. So that we need to avoid. And then interchange of reversal, ineligible credit and block credit. So people, they don't properly segregate or bifurcate this reversal of ITC, ineligible credit and block credit. They will mix up, and when they report in GSTR 3B, they will put it in the wrong columns. So the values, they won't put it in the appropriate places, and they will report it in a wrong way. So that needs to be properly taken care. So where they need to show the block credit, there only they should disclose that values. And especially with respect to the small taxpayers, what I have seen is they claim ITC without reconciliation. Maybe owing to the lack of resources or lack of knowledge, many people do this. They claim ITC as per books or as per GSTR 2B directly or as per GSTR 2A directly. So this is not a recommended practice, and it might land you up in trouble. And then recording transaction with own GST. This is also one like unique mistake which I have also seen in multiple organizations. They will record transaction with their own GST. They are only supplier, they are only recipient. So such kind of mistakes also do happen. So we need to be very careful when you enter the transaction, when you select the GST, you should be very careful. And then the next point is with respect to something with respect to sales, but it is also having an impact on the ITC. So that is with respect to free samples and gifts. Whenever you give out some of your goods which is meant for outward supply, if you are giving it as free samples and gifts, so in that case you need to reverse that attributable portion of ITC. You need to reverse that. So in case of exempt supplies and nil rated supplies, so that needs to be properly taken care. And some people who will be in accounting team, they usually do this mistake. They net off purchase and purchase return and do a entry. They will pass an entry doing a net off of purchase and purchase return. This is not acceptable, because if your supplier is uploading it as two different documents and you are uploading it as a single document, when you go for reconciliation, nothing will match. So I can understand if it is only in case of a single supplier, because so apparently I can just look at the supplier and just see whether total, when there is no difference, I can match it and I can do it. But what if such cases are like 1,000? We cannot do for like, we can go on manually checking for each and every supplier. That is not possible. Practically, it is not feasible. So in such cases, it will lead to problems. So howsoever document has been issued to you, please account it in the same way. Don't try to change the nature of the transaction, or don't try to change the whole feature of the transaction itself. So please do account as per the document received. And the last point is, it is also a very important point which most of the people don't pay attention to, because generally whenever they get the reconciliation report, there will be multiple things. As you can see, match records will be there, missing in GSTR 2A will be there, missing in purchase register will be there. So people will be very keen to know whether all their purchase records are matching, but they don't see the aspect if some records are missing in purchase register. So records will be present in 2A or 2B, but the records are not there in purchase register. they hardly pay attention to this. So because there are possibility that you might have missed accounting something, or you might have expensed of something which is having a ITC. So in such cases, it is very important that one has to see the records which are not present in purchase register. When you get the reconciliation report, please do pay attention and see why it is not present in your books of accounts. So this is also equally important. So once we have understood what are all the common mistakes, now let us quickly understand what are the do's and don'ts. So what are the important things we need to keep in mind, like what we need to do and what we should not do. So all the points are placed side by side. First we will see the do's and don'ts, and even the next slide is also basically on this. So we will quickly cover what it is. So do's, when it comes to do's, what I say is monthly reconciliation, that is a must, because even the acts act and the provisions of the act mandates it. So you need to follow the monthly reconciliation. And then properly identifying RCM related liabilities and credit claims. So now, even if you are aware, even in 2B, the RCM transactions will be reported. So based on that also you can take a call, and even if otherwise in your purchase register, you will be having the transaction which are liable to RCM, that you need to show it as a liability and discharge the liability and claim the ITC as well. So, but that needs to be properly classified, that those set of transactions. And then the remaining things are with respect to what we have discussed earlier as a management role and the operational staff role. So basically we need to have a defined roles and responsibilities, standard procedures to be followed, and proper delegation of powers, and then finally timely escalation. So escalation is a new point here. So if the action that needs to be taken is well within the power of the required staff, they can go ahead and take the action. Or if it is not there, then the same needs to be escalated to the higher person in the hierarchy. So that needs to be done in a timely manner so that corrective action can be taken. And the next thing is keep track of reasons for variation in claim. So basically now, as we all are aware, up to December, it was like over and above whatever your GST or 2A or 2B is showing, you can claim additional 5% of ITC. So there is a threshold prescribed in the act till that date. But in case if your ITC claim is exceeding whatever value that is being shown as per that calculation, so there is a possibility, because you might have missed out some ITC which was pertaining to you in the previous period. Now, if you are claiming that, it might inflate your ITC claim. So due to that reason, it might be showing more than whatever is the prescribed limit. So that doesn't mean we should not claim the ITC. We can claim ITC, but please keep a proper justification. Whenever, if any notice is issued in the due course, you should be able to justify your claim. You should be able to substantiate with the records. So that is another important thing. So now coming to the don'ts. So don't randomly claim the ITC as per books 2A, 2B without periodic reconciliation. So this, as I mentioned, so some of the small taxpayers will go with it thinking that as if the reconciliation is an annual activity. So that is not the case. We need to do the reconciliation on a monthly basis and identify and determine what is the eligible ITC, and then go and claim based on it. So that is one thing. And then not appropriately considering ineligible ITC and block credit. So it is not only that we reconcile and we claim. So even in 2B, even the ineligible and block credit flow with a particular column mentioning this ITC is not eligible. But the tool, whichever you are using, if it is not supporting that field, if that field is not at all coming, then it is your independent responsibility that you need to look for such transaction, remove that credit, and then only claim. Or if you are manually doing also, please identify the ineligible and block credit transaction and exclude them from the eligible ITC. So that you need to take care of. And another important aspect, so with respect to e-invoicing. So whenever you accept the invoices and account it, please ensure that if the supplier is liable to follow e-invoicing, he is issuing you only e-invoice, not the normal invoice, because you all are aware, if a person liable to issue e-invoice, if he is issuing normal invoice, that is not a legal document. And based on that, if you are claiming something, that is also not a valid claim. So please ensure that your vendor who are liable to follow e-invoicing are issuing only e-invoice to you. Okay. So, and one more important update for all your benefit. So from 1st April 2022 onwards, the threshold prescribed earlier for e-invoicing has been changed, and henceforth it will be 20 crores. Any entity having a turnover of more than 20 crores, they would be liable to e-invoicing from 1st April onwards. So earlier it was 50 crores. Now they have reduced the threshold in order to bring some more people into that ambit. So it will be for 20 crore and above turnover companies. And then considering value based on accounting standards and not following the procedure as per GST. So as you all are aware, so GST has its own set of valuation rules for certain specific transactions. It prescribes how value needs to be determined. So, but books of accounts, as we all are aware, we maintain it as per the accounting standards. So in such cases, while doing the compliance, GST compliance, you have to ensure that you are showing value as per GST rules, but not as per the accounting standards. So please do ensure, because in books of accounts, you would have followed accounting standards, but when you report it in the compliance perspective, please follow the GST valuation rules. And the next set of things here, do's and don'ts. Special care for exceptional transaction like sale, transfer of capital goods, transaction with bank, financial institutions, and airlines. Very often I have heard from many people, many recipients, they say that it never matches the airline credits or the transaction with the banking institutions. It never matches. But by this time, I definitely believe that they would have come to know the reasons for such variations. So based on that, they need to take a special care in order to address this issue and accordingly do the accounting and reconciliation. And then reverse wrongly availed credit as soon as it is ascertained. It is very, very important. It's a very important point. As soon as you come to know that you have claimed excess or incorrect ITC, please reverse it in the immediate next return itself. Otherwise, your interest liability keeps growing. Then there are certain ITC which doesn't reflect in GST or 2A or 2B. For example, if you are buying something from an SEZ on bill of entry, it doesn't come in your 2A or 2B, but still you need to claim it. So please keep the backup of the documents and claim that ITC in the respective return. So that is another important point. So the last point I keep on hold on either side. So before that, I will go through the remaining points on the don't side. Reversing credit without interest. Whenever you come to know that you have wrongly claimed the credit or you have missed out on some reversal of credit, please do it with interest. So that is a very clear statement. So please don't reverse only the claim which you have made wrongly. Also, you need to pay the interest for the wrong claim. Recurring pattern mistakes in accounting affecting reconciliation. As I mentioned, accounting has a very close relationship with reconciliation. So please ensure that the recurring pattern of mistakes done in the accounting has to be rectified at any cost so that the reconciliation becomes effective. And then, so whenever there is no proper defined structure, hierarchy in the workflow, then comes the confusions in fixing the accountability. Please don't create such confusions for yourself. Please define the process. Who is the responsible person? What is his responsibilities? Everything needs to be properly defined so that things are in place. And as I mentioned earlier, there is always a kind of hesitation among the operational level staff to communicate with the vendors. So that needs to be removed. So they need to be given a confidence that whatever they are doing, it is as per the terms and conditions, and there is nothing to worry about losing a relationship. So that confidence need to be given from the higher level of management. And delay in strict action follow-up and rectification process till annual return. So this deferment and delaying the process has been witnessed in multiple organizations. So that needs to be stopped. Basically, they need to have a fixed target timeline. I would say ideally, so May should be the timings. By May, one should be able to communicate all the mismatches to the supplier. So you can expect your supplier to respond within 2 or 3 months, max to max 3 months. They should rectify all their mistakes. And you should be ready by at least by September. You should be completely ready with whatever ITC your books are showing. All you should be able to claim by September. So please don't wait till the end moment, till the annual return, that all rectification will be done in the last month. That is not possible, because vendors won't be acting as per your expectations. So they will also be dealing with multiple vendors. So many confusions will be there. Please don't delay the entire process till the end. And the last point which I wanted to stress on, if your entity is working on reconciliation with an external team, if it is outsourced to an external team, please don't think that they will do 100%. So that is not possible. That is not even practically possible to expect 100% to be done from their end, because so they will be working only on the standard set of practices, and whatever is discretionary. Reconciliation is not just standardized process, it also needs some kind of discretionary decisions that need to be taken. So that can be done only from the internal team, because you are running the business, you are aware of what is the kind of relationship you share with the vendor, so what is the nature of transaction, all this you will be more aware. So please don't expect the external team to completely do its 100% and give you the 100% foolproof reconciliation report. That is not at all possible. Your involvement, active participation is equally required to create an effective ecosystem to have a effective reconciliation system. So that is all about do's and don'ts. So before I get into the next topic, I just want to show this roadmap, because our next small topics, 2 more topics we have. So that we will discuss based on this itself. As you can see, since inception of GST, the law has been changing from time to time with respect to the ITC aspect. They have become more and more stringent. So because it is affecting the revenue, they are more serious about it, and that's why they kept on changing. Initially, it was they said match with GSTR 2A, and then they said GSTR 2A plus 20% additional you can claim, and then they said 2A plus 10%, so 20% was reduced to 10, and then gradually they reduced it to 5%. Now finally this is what they are looking at. So now they are saying you claim only as per GSTR 2B. But is this the end? No, this is not the end. As you can see here, I have put a warning. So this warning, what is this warning? We'll be discussing in the coming slides. So for financial year 2021, specifically keeping that in mind, I have few suggestions. So because in 2021, what happened? So up to Jan, so they said you can go for additional claim of 5%. So that was there. But from Jan onwards, it is like, so you need to claim exactly as per GSTR 2B. So based on like you are matching with the books of accounts, all those things. So as 2 different set of transactions were involved, 2 different perspectives is involved in this year reconciliation. So I am just having few suggestions for participants who can follow this. So it's their wish, still they can analyze. If you feel it suits, then you can just go ahead with this. So some small taxpayers, as I mentioned, they have not at all done reconciliation with either with GSTR 2A or 2B. For them, I would say, please don't defer it any further. Please do the reconciliation. It is not the it is not it is an annual reconciliation. No. So you need to start doing the reconciliation right from now. And what is the suggested thing? I would say for them, please do reconciliation with GSTR 2B, not with 2A, because you know the very nature of 2A is dynamic. So, and it keeps on changing, and it increases your resources consumption, time consumption, because every time you need to download right from April, you need to download 2A and start reconciling right from the beginning. So it involves a lot of efforts. Please don't do that. Go with GSTR 2B right from April till date. Please do reconciliation with GSTR 2B. So that will keep you more safe, and it will help you even with your annual return preparation. So that is one thing. And then, so next, for the taxpayers who have already done reconciliation up to December, they would have done reconciliation with 2A, and now they have started from Jan onwards with 2B. So in such cases, what is the desired course of action? So for them, I would suggest, so I have a 2 option here. I have 2 options. So what I would recommend, if possible, if time permits, and if volume of transactions are less, and you have resources, enough resources, please go with reconciliation with GSTR 2B right from April. So this is what I would recommend, provided, as I mentioned, you, if time permits, resource is there, volume of transaction is not that much, please go with reconciliation with GSTR 2B. So if not, if this is not the case, if you are in a completely different scenario, then please do reconciliation April to December with 2A, and keep updating your 2A of subsequent months, and do reconciliation for April to December, and from Jan onwards do with GSTR 2B. So this is the recommended course of action for those who have already done reconciliation. And while doing all this, please do ensure that at the earliest regularize that 5% additional ITC. So that is a request. So whatever 5% additional you have claimed, please ensure that you complete this process of reconciliation at the earliest and determine what excess you have claimed due to this 5% rule. So provisional rule. Please check that and reverse the ITC if you have claimed excess. If not, it's not a problem. So that you need to be very careful about. And then reverse the ineligible block credit on purchase register to avoid the omission and associated interest. So this specifically why I have put this point is, so now as we are claiming ITC as per GSTR 2B, we will be every month doing reconciliation, and in that matched transaction, if block credit is there, if ineligible is there, we will be reversing it. But instead, what I would recommend is, it's a easier activity, what I'm suggesting. So in your purchase register for every month, please identify what are all the blocked and ineligible credit. In the same month, you reverse it. Don't wait for it to get matched in the subsequent months. Please reverse it, because it will not have any implication on the interest. So this is a recommended practice which I would suggest. And with this, I have one more slide, which is basically based on the budget bites. So whatever is relevant with respect to the reconciliation, whatever relevant points are there in the budget bites. So 2022 that I'm just covering. So this is the last slide, the last slide which we will be taking up, and finally we'll be moving to the Q&A session. So budget bites, as I mentioned already, we are going with GSTR 2B reconciliation. So that warning which I showed in the roadmap, so that is nothing but this is the warning. So is the claim as per GSTR 2B absolute? No, the answer is no. So now they have inserted few more conditions into it. So that which will be applicable from 1st of April or as and when notified by the GST authorities. So what are all the questions? Even if a credit is appearing in your GSTR 2B, you won't be allowed to take it. So they have mentioned certain conditions. So what are those conditions? Let us see one by one. So there are 5 points. We'll just go one by one. By any supplier within such period of registration. Suppose your supplier is a newly registered person. They might restrict the flow of ITC from such supplier to you for a specified time period. That is the first condition. Means if you are dealing with any new registered GST supplier, they might restrict the flow of ITC from that supplier to you for some time. So that rules are yet to be framed and yet to be notified. It is not yet done in detail. So this is the basic idea which they are giving. And the next thing is by supplier who has continued default in payment of tax. Means if your supplier has a past record or trend of not paying the tax in time, that is by filing GSTR 3B, not discharging the liability of tax, such suppliers ITC might also not flow to you. So for a specified period or based on the conditions which they are going to frame in the coming days. So this is another case. And third one is if your suppliers are understating their sales in 3B. So they will report it in GSTR 1, but as they have to pay tax in GSTR 3B, they will underreport the sales. So if they are doing such kind of activity also, then the flow of ITC from such suppliers might also be restricted. So in all these cases, as you can see, the victims are the recipients. So we need to be very careful when we deal with the suppliers, henceforth, whether they are a compliant registered taxpayer. So we need to ensure that. The next thing is default in discharging liability as per section 49 subsection 12. So this is a newly introduced section 49 subsection 12, which says that any person can use only particular percentage of their electronic credit ledger balance to discharge the liability. So as you all will be aware, there is a rule 86B which says that so a supplier while discharging his liability, he can use only 99% of his electronic credit ledger. 1% they have to discharge in the cash using the cash ledger. So that is the current rule. So it is having certain exceptions. So to whom it is applicable, that is also clearly mentioned. So if the person is liable to this section 49 subsection 12, if he comes under that purview, so and if he is not following it, in such case also flow of ITC from such supplier to you will not come. So they might be restricting it. So that is another thing. By such other classes of person as may be prescribed. This is the last one which they keep it as a buffer. As and when they want, they will be adding additional conditions. So these are the different conditions which they are putting in order to restrict the flow of ITC from your suppliers. So another important point which came out was the one of the major due date which has been changed. That is earlier it was 20th of October, that is the filing period of September was the due date. If you want to claim any missed out ITC during a particular financial year, you can claim it up to the next financial year, September return. So that was the timeline. Now, instead of going with the filing period concept, they have made it as directly 30th November. So henceforth, please mark in your calendar, compliance calendar, 30th November is a very important date. So if you have missed out reporting any sales, or if you have missed out claiming any ITC, or for many other aspects, this is the standard date which has been fixed in the budget 2022. So with these points, I think I complete my presentation part, and now the floor is open for question and answers.
All right. Thank you so much, Ms. Deepa. That was indeed a very insightful presentation. Of course, we have a few questions. There's one question from Mr.
I will check the Q&A tab.
Sure.
Okay.
Sure.
So, but before that, I think we had one question which has come
Correct.
from the registration form itself. So there
Correct.
was a question saying, can correction or amended GSTN number for 1920 and difference in GST ITC as per portal and books action? See, for 1920 financial year, the last date would be December 31st. Or for basically for the claim, it will be September return. So post that, if some of your suppliers have updated your GSTN number owing to the incorrect earlier upload, so that you won't be able to claim. So that correction is not possible. So that is the first question. And now let us see the questions in the Q&A tab. We have paid RCM since 17-18 to 21-22, but we have not availed ITC in 3B. Can we avail these availed credit now? Your views, please. No. So 21-22, yeah, you can, because still the timeline is there. You can claim. But earlier, for which the timeline has already elapsed, that you are not, you won't be able to claim it. And then another question: if the hospital pharmacy buys syringe and medicine which will be consumed in OT, the consumed items are basically written off. Is there any tax liability of the consumed goods? Sorry, this question is not clear. So pharmacy is a separate entity, you mean to say, and it's like a sale to the institution of hospital. Am I correct? Please let me know whether my understanding is correct.
Yeah, Mr. Akash, if you can back to that question of yours with a little more, it'll be great.
Okay. So are there any questions in the chat box?
Yes. There is one question from Mr. Rahul. Please explain with one example of invoice and different scenario of reconciliation.
So I literally unable to understand what is the context in which this question has been put. One example of invoice, for example, I will just say, so I have bought something from a supplier who has issued me invoice 001, assume 001 invoice he has issued to me. So I receive that invoice and I account it in my books of accounts. So the similar supplier uploads the invoice in his GSTR 1 so that it populates into my GSTR 2A and 2B. Okay. So now we need to compare what I have accounted in my books of account and what the supplier has uploaded, whether it is matching or not. So there is possibility that it will match most of the time, but wherever there is some changes done by the supplier while uploading it into GST portal, in such case it will not match. And if you have incorrectly accounted due to some clerical errors, you have like 001, you have prefixed it with some number or suffixed it with some number. So when you go for reconciliation, basically I'm saying when you are using some automated tools which will do some auto reconciliation by themselves, in such cases what happens, this will not match. Then you need to check one by one, and then you need to identify, okay, this is a matching record, because due to some mistake either from your end in the books of accounts or from the supplier, the record is not matching. But when you go record by record, you'll be able to understand, but that becomes too difficult when you are having high volume of transaction. So that is not possible. So that's why I'm stressing more on accounting, because it's very important to have a effective and accurate accounting system.
Okay. There's one question. Okay. He has backed it. So Mr. Akash has actually backed this question.
I think with respect to the same question, something has been dropped on the chat box. Am I correct?
Correct,
It's the
correct,
same
correct.
entity. They are claiming the ITC for that purchase, and they are the consumer. So if they are claiming the ITC, obviously means you have charged GST. They are claiming the ITC. So then, what was the question?
Okay. Let's do one thing, ma'am. We can actually, Mr. Akash, if you would like to actually talk about this, we can unmute you. That can also be done. Meantime, I think we can answer Aisha's question too.
And GST is inactive. I have uploaded the invoice in B2C instead of B2B and paid tax and respective. But now the recipient GST is active, and if I upload the invoice in B2B and my invoice is 0 in B2C, will I be liable to pay interest? So invoice status? No. Aisha, actually, so there is no non-disclosure or non-reporting of invoice from your end. Na? So whether you have reported it as B2B or B2C, that is totally a different matter. Okay. As you have reported that sales and you have discharged the liability based on that record, you won't be liable to any additional interest. So that is very clear. So this becoming active and inactive, so it has become very common.
Okay, Mr. Rahul has.
One more thing, if you have delayed reporting itself, then there will be an interest implication. I could see now the recipient GST is active, and if I upload the same invoice in B2B and amend invoice as 0 in B2C, so will I be liable to pay? No. This is there won't be any interest implication unless you have delayed the reporting itself. So next question, we'll move on. Due to some reason we could not claim ITC from the beginning. Is it not unfair that we are not allowed to claim our money? Why is there time limit to claim refund? It was not the case with VAT refunds earlier. This has to be taken up with authorities concerned to allow refund of whatever period. I understand. See, nowadays it is happening like revenue is putting all the responsibility mostly on the shoulders of the recipient. So that is the case actually. Even with respect to the ITC claims, if you see, so in the upcoming year, that is in financial year 22-23, there are certain few more additions in this budget provisions. If you have seen, if your supplier has not paid tax and filed his 3B, then you are not supposed to claim that ITC. So earlier they were telling us, please see whether he has uploaded that record in GST1. Now you need to also check whether they have filed their 3B. So these are all the additional burden which has kept on increasing since the inception of GST. So there is no way that we can come out of it. So we only have the way to follow what they are saying. And on a respective forum, we can also raise these questions. So why all the liabilities and responsibilities are shifted to the recipients? Because once the supplier admits his claim by uploading the record, government can directly recover from the supplier. That they are doing, but they are not giving the benefit to the recipient who has actually paid that amount. So that is indeed seems to be very unfair, but we can't help. So if you have not claimed any ITC which has already barred by the prescribed time limit, then you cannot claim that ITC. And even with respect to VAT refunds, as you have mentioned, in GST, there is a specific timeline for making an application for refunds that one has to follow. There's no other way out. If the vendor does not pay tax and non-compliant, is there option for us to pay under RCM? So no, it's not possible. So unless the transaction itself is covered under RCM, for other transaction, we cannot by ourselves decide and make it as an RCM transaction. That is not allowed under the Act. Okay. I think we have completed. Siddharth, any questions in your chat box?
No. As of now, these are the questions that we've taken and answered. There's one question from Mr. Manoj now on the Q&A tab.
Okay, our company has been merged, name and GST number has been changed. We had filed some refund claim earlier when GST registration was active. In old name and GST number of the company, some refund has been sanctioned and some has been rejected. We have filed undertaking for recrediting such amount through PMT03, but till date PMT3 has not been issued by GST authority. Whether shall we receive such pending amount in new name and GST number of the company, or what action we have to take for recrediting such pending refund amount? I think better I suggest please go and meet the respective officer. So unless you meet them, obviously there is a possibility that they might issue the pending refund credit to your new company name, because this track they will be having now. So your company has been merged, what is the new PAN number, all other details they'll be having. But still I would recommend you please go and meet that officer. So if they want further clarification, because sometimes they keep it hold from their end, because they want more clarification, but they don't voluntarily like call for clarifications or something like that. They wait for the assessee to go to them. So in such cases, like as it is in our interest, please go and meet the officer and check with them what is the issue, why the pending refund is not credited. So please inquire with them and get the complete knowledge of what is actually the issue. So any other question? I think are we running out of time?
Yeah, I think we can spend another 1 minute since we are kind of going away from the time limit itself. One question from Miss Purnima. And aside that, I would like to launch one last poll which I was not able to launch earlier. So let me just launch that in the meantime for our
audience.
You
can launch. Meanwhile, I will just go through this question and try answering it.
Yes.
My GST was inactive and hence supplier has uploaded the invoice in B2C. But I am paying the liability and revocating my GST. But no invoices are available in GST 2B. Shall I avail ITC as per purchase and pay the balance liability? So it's very sad, but we can't help. You need to wait for your supplier to amend that invoice. Please don't claim as per as per books. So that is not recommended. Because henceforth, I believe most of the notices, all these things will be like they might be automating it. So even for smaller mismatches also we might be getting notices, and it will be like going to the offices. All these are hectic procedure. So if it is not that significant amount, please wait for your supplier to amend that invoice. So once they amend, it will come to your credit, and then please go ahead and claim the ITC. Then issue with the proper officer, why he is not reactivating it. So obviously, I understand your concern. So unless your GST becomes active, they won't be able to amend the invoice. So I understood your concern. I think you need to take up with the proper officer. No other way out. So please check with them why they are not activating it. So tell them that this is the issue. So you need to discharge your liability and get the legitimate ITC, and you need to claim it. So please convince them so that they activate it, and then you go ahead and inform all your suppliers to amend the invoices, and then go ahead and claim the ITC. So it sounds simple. I know it's a difficult process. Okay. So great. I mean, of course, we can actually spend a lot more time on questions, but we will obviously have to stick to our time. So those of you who would like to interact with Miss Deepa, just a kind note that I wanted to mention. You will actually be redirected to a survey form after this meeting, after this webinar. So please mention in remarks that you would like to reach out to Miss Deepa, and I will share her mail ID to all of you, the ones who are interested. That can be done. So any queries that you have, she will take it up over mail. Ms. Deepa, I hope that's okay with you. Yeah, that's fine.
Yeah, so that can be arranged. So I will look forward to the ones who want to interact with her in the survey form remarks. You will be redirected directly to your browser on this. So on that note, I would like to close the session for today, and yet another very informative session from Ms. Deepa. Thank you so much for your time and efforts, ma'am.
Thanks.
We will definitely look forward to seeing you in another webinar in the coming months. And also, the ones who have shown interest for our demo, please note we will reach out in the coming 7 to 8 working days from our team. So that will be done. And Ms. Deepa will take up queries for those who have mentioned on the survey form in the remarks. Thank you all and have a wonderful evening and a wonderful weekend as well. Thank you all. Thank you, Ms. Deepa.
Thank you, Siddharth. Thank you.